quick. All right, looks like we're going live on YouTube real quick. Close this. All right, we're good to go. All right, my name's Shawn. I'm using a 0.01 lot size. What is the minimum I should have in my account for US 30? I only have 2,500, and I think I wouldn't survive a. Hey man, you should be fine with a 2,500 account. Generally, you just need a minimum of 1,000 to trade US 30. Are you trading with Hugo's Way, or which broker are you using? Because I think it'll depend on your broker as well. I know for Hugo's Way, the smallest lot size is 0.01, but that 0.01 is equivalent to a standard lot if you're comparing it to Forex or any other type of assets. But you should be fine if you're trading with a 0.01. If you have at least 1,000 in your account. If you're using Hugo's Way, the valuation is a little different too. It's not $1 per pip. I think $1 per pip is for AvaTrade, but for Hugo's Way, it's about, I think, 50 cents to 75 cents per pip. Oh, you're using KOT? Yeah, KOT Forex is pretty much the same with Hugo's Way. So I think you should be fine with at least 1,000 in your account. You should just always make sure to have your stop loss placed though, because the thing is, if price passes where you're supposed to be exiting and you don't have a stop loss, then your account could definitely go to zero if you have max leverage on there. Yeah, you can move to Awanda or Forex.com. The only problem is they don't carry US 30 depending on where you're located. I think I forgot who's. Let me see if I can figure out who it was. There's someone in the group that has Awanda, but they're using it with a their account was signed up in Malaysia, so they're able. Oh, Canadian. Yeah, so I'm not sure how the Canadian assets work, but I know people from Malaysia that have an Awanda account. They're able to trade US 30, but I know here in the US we're not able to. So it would just really depend on your account type. If you can find it on when you have the account. Under your assets, then yeah, you can trade it. But personally, we can't trade it in the US, so I can't really confirm whether you'll be able to trade US 30 on those. But yeah, I'd be careful with your current broker with KOT, because they're known for slippage. So I mean, you can literally blow your whole account if price passes through your stop loss. Man's asking, is lower leverage better for US 30? Not necessarily. I mean, especially for your broker, since you're using an offshore broker that's unregulated, if there's slippage, then your leverage won't even matter, because it can go straight to zero. But if you have a regulated broker, then they'll respect your stop loss and they'll probably refund you if it goes through slippage. But I wouldn't necessarily say that lower leverage is better. I think you should focus more on risk management, because if regardless as to whether your leverage is high or low, if your risk management isn't on point, then you can lose more than you really want to, even if you had higher or low leverage. But yeah, US 30 moves really fast. So even if you have higher or low leverage, if there's slippage, depending on your broker, especially if you're using an unregulated broker, then it'll shoot right through. So it won't even respect if you have higher or low leverage. So it's really going to depend on you being responsible with your stop loss and monitoring your trade as it's live. And personally, I wouldn't leave a US 30 trade running unmonitored anyways, because it moves so fast. It moves about 100 times faster than normal Forex pairs. So you definitely would have to watch it. I wouldn't set and forget it. I would definitely watch it and make sure that it's not passing a stop loss without triggering it. Because that's happened to me before with Hugo's Way, and it nearly blew my account, which was fine because I only had 1,000 in there. But if I had my full account on that trade, then I would have been screwed for sure. Let's see, Jahan Jahangir is asking, how many trades do you have running at any one time usually? So I don't really limit myself to a number of trades. If there's entries available, then I'll take the trade. So right now I have 1, 2, 3, 4, 5, 6, 7, 8. I have so I have 8 live trades right now, plus US 30. So I have about 9 live trades. If you guys are still in US 30, it's looking good. I don't know if Sizuk is in here. Oh yeah, Sizuk, you're there. So I'm sure Sizuk is still in his US 30. So if you guys took my US 30 call from earlier, it's still live right now. Looks like it's halfway to profit. Let's see how many pips in profit we're in. Not bad, like a little over 1,000. So like maybe like 1,100 pips in profit, or no, actually pull down a little bit. So around 730, 750. So it's looking good so far. I mean, if you guys still have it active, I would just move your stop loss and profit just in case, in case it pulls back. But it almost always hits, full profit or stop loss. So if it's all the way up here, I think it's going to keep pushing on up. So if you guys still have that, I mean, you guys can be safe. I have an alert set up here, so if it does end up hitting, then I'll give you guys an update. But it looks good so far. So I usually have that set up, on its own little chart because I like to look back at it. But I also have the 4-hour pretty much set there. So C6 that I gave in totally win. Yeah, I know you're pretty scared earlier when you saw it down here in the red. But I mean, if you just trust the system, and I'm sure that it usually plays out pretty well. So, but I mean, personally, I probably would have exited too in profit because it's NFP week, and anything could really happen. All right, let's see what else we got here. Nice. Did you made pretty good profit off that? Because I know you were trading in and out of it. I was scalping it earlier too. I kind of wanted to scalp it again, but it's just too risky because it's an NFP. So yeah, if we took this trade right here, because this was clearly a nice entry for the scalp on the 5-minute, and you're scalping it both ways, which I mean, you probably could have made a lot because right here, if you scalp this one, could have locked in about a little over 1,000 pips. If you scalped it coming back down, and a lot of people scalped it back down, could have locked in about well over 2,000 pips. Again, upwards, could have scalped it another 1,000 pips, and then on this last signal, another 1,000 pips. So I mean, you guys could have locked in nearly 5,000 plus pips off just this one move from this morning. I mean, and that's NFP for you. Lots of volatility. Thankfully, it's moving in our direction, but it's looking good so far. Nice, you made 200 off that. Cool. That's actually pretty good because I mean, if you're trading on Hugo's Way or LMFX, I think it's like 50 cents a pip or maybe less. So I think if you even hit the full profit, you probably would have made 200. So you pretty much made the entire profit.
I'm back, Shawn.
All right, Aaron. John here is asking, do you plan on closing your trades before NFP? I advise everyone to close their trades, but for me, I run separate positions. So I have one position that runs, the full TP or full stop loss. And then I have another position where I scalp within the trade. So the full position, I usually let that run, and then I move my stop loss and profit just in case, anything happens. But I don't manually close them just for NFP. Depending on what pair though. Some pairs, they'll move crazy. Like if you're trading a major pair, then you're gonna see some crazy movements. But as long as I'm able to, eliminate my risk where I can put my stop loss in profit so that if it doesn't go my direction, then I can get out with some profit. But then I let it run if it ends up going in my direction. But I don't recommend anyone else doing that unless you know what you're doing, because, and especially if you're using an offshore broker, because if you're using an offshore broker and there's slippage, then they're not going to care about your account. If you want to, dispute that there was slippage, they're just going to laugh at you and tell you to go away. But if you're using a regulated broker like the ones I'm using, Forex.com or TD Ameritrade, then they'll usually give you a refund, because I've gone refunded before by both of them. And that's why I still leave my trades open. But if you're using an unregulated broker, I wouldn't recommend leaving any trades open, because that gives them opportunity to manipulate price and your stop loss, just to cause slippage and cause you to lose. Because obviously, if you know how unregulated brokers work, they usually trade against you. So the answer will vary depending on what type of broker you're using. So let's see, are there any other questions, guys? Looks like there's no questions right now. So I'm probably just gonna look at the chart, because we have the 4-hour candle closing in about 45 minutes. So I'm gonna scan for new signals. But if you guys have any questions, feel free to put them out in the Q&A, and I can get to them. So let's see, I'm gonna go down the our active pairs right now to see how they're doing. So let's see, our odd CAD is slightly in the negative. It looks like I might have gone stopped out already, because we hit TP1, or no, actually we hit the 10 pips, and I moved my stop loss and profit for my scalping position. But my full position is still running. So it's only negative about 7 pips, which is not too bad. We can probably anticipate it to come back up. Zoom out. Yeah, it's in a strong uptrend. Looks like it rejected right off this support zone right here. So it's probably gonna shoot on up. So I wouldn't be too worried about that. Let's see, John Harris is asking, for people entering the K² program with small account sizes, what do you recommend for stop loss sizes when you're trying to trade US 30? So your stop loss isn't going to differ, if you have a big account or a small account. If you can't afford, the risk for US 30, because generally my, so I'll go to US 30. Generally my stop losses are around, they're around 2,000, like the minimum is 1,500 pips, so 1,500 to 2,000 to 2,500 pip stop loss. So the thing is, if you can't handle this risk, then you just shouldn't be trading it, because the stop loss is placed there for a specific reason. As you can see right here, so let me go back to the 10-minute. So yeah, I put my stop loss right here because I knew it was probably going to retrace back. I put it at the previous swing, which was somewhere around here. I mean, so if I go back, let's go and zoom out. The previous swing was actually, it was technically right here, but it was way too close. And I knew that if I put it there, I'd probably get stopped out. Let's see, the swing was only about a little over 1,000 pips. So usually the minimum that I like to put my stop loss back from is 1,500 pips. So let's see if that would have hit if actually would have been fine. So see, if I had my stop loss at 1,500 pips, it would have pulled back, but it came really close, but it didn't. And then it shot straight back up into profit. And I put my stop loss at a specific price point, because I know this is, this is the pushing point. So if price was to cross this point, then it's definitely going to reverse. But as you can see here, I placed my stop loss perfectly, because people didn't get stopped out, and then it shot back into profit. Well, I didn't even put it here. I actually put it farther down to 2,000. But that just goes to show that, stop losses are placed there for a specific reason, and you should never minimize your stop loss when entering a trade. The only time that you should minimize your stop loss is when it goes in a profit. So like right here, price pulled back, came up. At that point, I probably would have minimized my risk, moved my stop loss in profit, which I did earlier when I was scalping. And then I got stopped out for a couple $100 in profit, which is fine, because you didn't lose anything. And then if you wanted to re-enter, you could have re-entered right here, like a lot of people did. And then you go back deep in profit. So if you re-entered at the entry right here, you'd be in profit another 1,000 pips. So you could have done that right here, locked in about 1,000 pips, got stopped out, pulled back, re-entered right here, locked in another 1,000 pips. So no losers right there. So pretty much, if your account's too small, if you have less than $1,000 in your account, then you shouldn't be trading US 30. I know it sucks because you guys see, all the profits that we're producing with my daily signals. But the thing is, if you don't have enough money, you can't survive this drawdown, even though it's not a loss, because you need to just survive the pullback. Just save up some more money, or deposit more money, and then once you have at least 1,000, then you should be fine. But personally, I wouldn't minimize your stop loss just because you want to get into a trade. Because as you can see here, see my stop loss was at 2,000 pips. So if you wanted to minimize your stop loss to 1,000 pips, you would have gone stopped out. And that's why I recommend that you follow directions when I post the signals. I know a lot of people like to take shortcuts and they like to minimize their stop loss or minimize their TP. Minimizing the TP is fine because you guys can, you know, take profit whenever you want, but the stop loss is really important because you have to be able to survive, you know, small pullbacks like this. All right, cool. So I hope that answers your question, John. Let me see what else we got. Marion's asking, is the 5-minute chart better for scalping US30? Yeah, so the 5-minute charts is where I'll scalp US30. Some people ask me today if I scalp it on the 10-minute. I haven't before, but I found really good results on the 5-minute. I'm sure you're familiar with the scalping strategy that I apply. So as you can see, I mean, I could run through it real quick. So like right here, I'll be really quick with it so you guys can, just so the new people can see. So K2 US30 scalp strategy. So for one, you identify swing low high. 2, identify K2 signal. And I forgot the last one. Next one. Aaron, do you remember what the last requirement was? I always forget this when we go over it.
Yeah, for real, we always forget that one.
The last one is, oh yeah, confirm bearish, bullish movement between swing and signal. All right, so this is the scalping strategy. You guys will need the K2 indicators to apply it, but it's real simple. So I mean, if you guys are new here, if you guys have been around, you guys have seen this because I go over this almost every time. But let me go and rewind over here just so I can show you guys a quick example of how it works. All right, so first you want to identify the swing low since we're taking a buy position here. So first, we're taking a buy position because the signal is a buy signal. So in order to identify the K2 signal, it'll be these vertical lines. What these vertical lines do is they identify the momentum of price. So right here, we have a buy signal and it's a bullish candle. So this gives you confirmation that it's going to be a bullish move to follow. So first we're going to identify the swing low since we're taking a buy. You know, I'll just draw a little rectangle right there to identify it. So right here, you can tell this is the swing low because this is low, swing high, swing low, swing high, swing low. So this is low right here. Requirement number 1 met. Next, you want to identify the K2 signal. Right here, we have a buy signal. And next, you just want to confirm a bearish or bullish movement between the swing and the signal, depending on the direction that you're trading. So we're taking a buy here, so we're going to want to confirm a bullish movement. And this is going to be very subjective depending on how you perceive the market. Usually, when I try to identify if it's a bearish or bullish movement is if the candles between the swing and the signal are very bullish. So right here, we had a swing low right here, and it was followed by a strong bullish candle, and then another bullish candle followed by the signal candle. So this gives me an idea that, you know, this is a strong bullish move. So after those requirements are met, you're going to use the long tool just to, you know, mark up your chart. You're going to enter on the open of the following candle, and then you're going to put your stop loss below the previous swing, which is somewhere around here. I'm just going to round it to 500. I like to use round numbers just, you know, so I have a good understanding. And I trade a 1-to-1 risk reward ratio, so I'll put a 500 pip target as well. And then if we let that run, profit target. So in about how long? 1, 2, 3, 4, 5. So in about 25 minutes, you would have locked in 500 pips. And if your broker valuizes their valuation to, you know, be pips for US30 is $1 per pip, you would have made 500 bucks in about 20 minutes. If you're trading on Hugo's Way or, you know, some other broker that values it, you know, 50 cents to 75 cents, then you'd have half of that. So instead of 500, you make 250 or a little more within, you know, 20 minutes, which is not bad at all. All right, let me see. I'm gonna go down the questions again. I'm not gonna take too much time on the questions because I realize that sometimes I take a little too much time and I'm not able to get through all the questions all at once. So let's see. And Mine's asking, when scalping US30, do you use the K2SR? No, for scalping, I usually don't. I mean, I have it there sometimes just to have, you know, an understanding as to what price is going to reject from. So like if I was looking at it from this previous entry, it makes it kind of impossible for you to trade if you're going to be, you know, eyeing it, because the thing is, if you're trading on the lower time frames, there's going to be a ton of support and resistance areas. So if you look right here, price is really close to this resistance, 2,500. So the thing is, if you let this stop you from entering the trade, you would have missed the entire move. So generally, I don't use the K2SR when I'm scalping. I do kind of use it if there's a lot of zones there. So see right here, there's just one zone. But if you're looking right here, there's like 1, 2, 3, 4. There's like 4 zones right here. So the thing is, if there's a lot of zones in that area, odds are price is going to reject off that area. So as you can see right here, price came down, came up, rejected off this zone, came down, rejection, came up, rejected, and then it tested again. So as it tested again right here, you know, this would be a good indicator that, you know, price is probably going to reject off because there's so many resistance points right here. So definitely, if I saw this, I wouldn't have taken a buy because obviously it looks like price is going to reject from there. The thing is right here, so we have just one resistance and we have a bunch up here. So I'd probably try to exit before I get to this area right here. Let's check out the measuring tool, see how much distance that is. So that's about 800 pips. And if you look at our previous example, it was a 500 pip target. So you would have gotten out already by then. So see if so technically you could use the SRs, but personally I just don't use it because it kind of gets in the way if you're trading on the shorter time frames. But even if you did use it for, you know, this example, you'd be cool because your target was only 500 pips away and you would have exited before you even got to those zones right there. So you would have been good to go. So yeah, hope to answer your questions. Let me answer that. Let's see. All right, Genesee is asking, hey Shawn, so would you recommend if someone started off with less than 1,000 to focus on more liquid pairs like Euro USD? Yeah, definitely. So if you don't have 1,000 in your account, then I'd stay away from US30 and, you know, indices in general, because they move like about 100 times faster than normal Forex pairs, especially US30. So the thing is, if you know, if you don't have enough money in your account and then you get margin called out, you're going to lose your trade when it can bounce back. So let me, I'll go back to our current US30 trade right here. So the thing is, if you have less than $1,000, you're not going to be able to survive this drawdown right here, this 2,000 pip drawdown. You're probably going to survive. So if your broker your broker's valuation of US30 pip cost is $1 per pip, and you have $500 in your account, once this pulls back 500 pips, you would have gotten margin called out. So see, you wouldn't even be able to survive this drawdown right here. So this is why we recommend that you have at least 1,000 in your account, or even more. I mean, 1,000 is the bare minimum. So that's pushing it. So if you're not able to fund your account with, you know, with at least $1,000, then I personally would just stay away from indices and I would just trade, like you said, you know, more liquid pairs. So I wouldn't personally, I wouldn't focus on Euro USD because Euro USD, even though it is liquid, let me go back. I'll go in a bigger time frame. Even though it is liquid, it's not as fast as other pairs. So if you look at Euro USD, we're on the 4-hour time frame. So this is 4 hours per candle. And if you look at how much it's moved from just today, it's only moved about, or not today, but just from this most recent candle, it's only moved about, you know, 20 pips max, not even 20 pips, like 18, 19 pips. The very liquid pairs would be something that's crossed with the Australian dollar or the New Zealand dollar. So like looking at, let's see, AUDJPY. So if you look at AUDJPY and then you measure the candle, it moves a little more, like, you know, 24 to 25 pips. The ones that really move fast are going to be like AUDNZD. So as you can see right here, this thing moves like 40 pips. So this is what you call liquid. And you could even compare it to Euro AUD. So Euro AUD per candle is, you know, it's about 100 pips. And you can tell like this is a huge difference compared to Euro USD. Euro USD is a major pair, so it doesn't move as liquid as other. I mean, it's liquid, but it's not as volatile. So you can see right here, this whole time period, if you're, like keep in mind, these are 4-hour candles. So in 8 hours, it only moved about 20 pips. So you're not going to be able to scalp this. I mean, you could scalp it, but it's not going to be really worth your time. If you want to scalp something, you want to use something that's crossed, like a major pair, that's a major currency that's crossed with the odd Australian dollar and the New Zealand dollar. So something like I already went over EA. If you want to go over like EN, this one as well. So look at this candle right here. It's one candle. It's over 100 pips. That's very volatile, very liquid. Same with GA. This one candle right here, 160 pips. It's huge. Let's see what else we got. GN. Same with this one. Very liquid. You can see these huge candles. This is something that you can scalp with and make money pretty quick. 135 pips. And then here's an example of the opposite, like UCAD. UCAD moves very slow. So look at this candle right here, the most recent one. Actually, this one's moved pretty quick. Normally UCAD moves pretty slow, but I don't know, for some reason this past week it's been moving super fast. I don't know if it has something to do with, NFP, which is probably why, because it's paired with the US dollar. But generally UCAD moves pretty slow. So this is like, non-NFP time. Let's see. Yeah, like in March. So if you see right here, it only moves about, it moves a little less than your USD. So let's go to like a random candle like right here. About like 20, 30 pips. So pretty much all the major pairs, while they are liquid, they're not as volatile as, minor crosses. So let me see, I'm done with that question. All right, Jeff said, do you personally use Hugos for US30? Yeah, so my Hugos Way account, I only trade US30 on there, and I only keep about 1,000 in there. So whenever I go over 1,000 in profit, I'll withdraw my funds, because the thing with Hugos is that they're pretty unreliable, especially during certain times of the day. I found that Hugos Way is very unreliable from 10 p.m. to midnight my time, which is Pacific Daylight Savings time. During that time, data is always delayed for some reason, and your orders won't get filled. You always get like an error. And it's happened to me once, or actually it's happened to me twice, where my account was like nearly blown. And I kind of wanted to give up on US30 at that point, because I didn't think Hugo's Way was reliable. But the thing is, if you keep a small amount in there that you're willing to lose and burn, then that's fine, because if that happens and you burn your account, then it's cool, because you knew that you ran the risk of losing that money. But personally, I wouldn't keep any like big account sizes on Hugos, because if something like that happens and there's slippage and your account goes to zero, I wouldn't expect them to refund you. So let's see. Let me see if there's any other questions here. Eve said, so is the US30 valid trade to get back into? Let me go back to it. Personally, I wouldn't get into it right now. Tomorrow's NFP. You don't want to get stuck in this trade. You could enter it if you want, but it looks like it's kind of overextended. I'm not saying that it's not going to go to full TP, because I definitely think it's going to go to full TP or somewhere close. But as you can see right here, as it's pushing up, it's getting to a very strong resistance point right here. So the thing is, if it goes up there, that could be double top, triple top if you count these other wicks over here, and it might reject off it. So personally, I wouldn't re-enter. The only time I would re-enter is if it pulls back in the negative over here, and then it pulls back up. I would have a buy stop at the original entry. So right here, as it came down, at this point, I would have put a buy stop at the entry right here, and then I would have wrote it up. So if you took that again from entry, the entry's right here, and then you wrote it up to where it currently is, you would have been up nearly well over 1,000 pips. You wrote it all the way to the top. So as you can see, if you enter right now, you're way too late, because it's already in profit, 931 pips. So I personally wouldn't enter at the specific point in time. And I just wouldn't enter for the rest of the night, because it's already 5:30 p.m. London opens in about, was it 7 hours? And then at that point, you just don't want to be stuck in the market when NFP is happening, because that's when most manipulation happens. And this is going to be spiking around like crazy. So I wouldn't even risk it. Let's see, I'm going to go down the list again. CS said, how can we check our Hugos account to determine what leverage is? I'm not sure how you can change your leverage on Hugos. You could probably do it on the website.
Yeah, they have to go to the website, then click on my account, and then click on I think settings.
Gotcha. Yeah. So Aaron answered your question. So if you want to go and change your leverage, you can go to settings on Hugo's Way on the website, and then you can change it there. I mean, leverage shouldn't really matter because Hugo's Way doesn't really respect your leverage anyways. Because even if you have low leverage, there's still a possibility of slippage happening. So personally, I would just make sure that you're exercising proper risk management and you're monitoring your trades. Because if there is slippage, then don't expect Hugo's Way to refund you. But yeah, if you guys want to change your leverage, you can do that in the settings. So let me see what else we got here. Mayan said, how do we get the countdown clock on TradingView? Yeah, so on TradingView, in order to get that countdown clock, you just have to click on settings right here. And then click on this right here, countdown to bar close. And then you'll have that countdown right there. All right, let me see what other questions I got here. John's asking, how does your strategy perform during NFP? You can't really strategize NFP. The thing is, if NFP is that it's random. You can't really predict, which direction it's going to go. Like last month was the first NFP since the coronavirus got big, and everyone was expecting price to come crashing down like crazy. So let me see if I can go back to. I'm just going to go back to that time period when we had. Try to go to some type of pair. Okay, so GU. So I'll go to GU. We'll go to Aaron, do you know what was the first month of here, I'm gonna pull up my calendar real quick. I'm just gonna show you guys how NFP moved last Aaron, do you remember if NFP was on the 3rd last
I'll check right now.
last month? Yeah, because I'm just gonna show them that you can't really predict NFP. It's always random. Like a lot of people think they can predict it. Like people think they can predict news or stuff like that, but it's not really possible because the thing is the ones that are in control of the market during that time are the market makers. And a lot of people think that like they can predict it. But the thing is, market makers, what they do is they look at sentiment. So if a lot of people are buying during NFP, or there's a lot of what they basically do is they'll go to here. I'll just show you guys on the chart. It's gonna be a lot easier. Let me see IG sentiment. IG sentiment. GBP USD. All right, cool. So right here, so this is how the market makers and institutions manipulate the market during not just NFP, but during any type of news release. So I'm sure you're aware that that there'll be random spikes in price during news releases, like something like this. Like zoom in and see if you can find some heavy news. So like you can see right here, there was some heavy news that was released, like a ton of GBP news, and then followed by that news release was a huge gap up of about
Hey, Shawn.
200 pips. Yeah, Aaron?
AUD is moving, bro.
In our direction, or?
Yes, sir.
Oh,
my
yeah,
Lord,
right.
let's get it.
So check that out right now.
I had sold EA, bro. But I hop out of it right
EA?
now. Yes, sir. Oh, it's dropping hard. Oh man, that was a good one. Let's get it.
Yeah, so basically the way that the market makers and institutions manipulate price during news releases and NFP is they'll look at the IG sentiment, and pretty much what the IG sentiment does, it tells you where most of the traders are sitting. So right here it says 58% of clients are long, so there's 58% of buyers in the market. And generally what the institutions and market makers like to do is when there's a news release, they know that they can manipulate price during that time because a lot of people are trying to gamble. Like trading news is basically just gambling. And pretty much what happens during that time is if there's more buyers, then you know what the market makers and institutions are going to do is they're going to do the opposite, because obviously they'll make more money trading against where the majority of the people are. So if there's 58% buyers, then they're going to spike the market downwards so they can stop everyone out. And then what do they do after? They shoot it right back up to pretty much bring price where it's supposed to be. So as you can see right here, price kind of slowed down a little bit. There was probably a news release around this area, dropped price down, stopped everyone out, and then put it back to where it was supposed to be. And this is why I don't trade news, and I don't think you should trade news either unless you know you're trying to gamble. So technically, there's no real strategy that works during NFP. A lot of people say that they have a strategy for it, but it's all really luck. That's pretty much what it is. All right, everyone is saying all of our trades are going crazy right now. So let's see what's going on.
You has spiked up, bro.
All right, guys, let's see. So, oh, here we go. US 30. There goes my US 30 call from earlier. You guys just got, oh man, that's a lot of pips, guys. So let's see from entry. Yeah, I'm up 1,500 pips, almost a full TP for 2,000. So if you guys took my US 30 call earlier, money. So over here to odd CAD. Oh yeah, I'm on the wrong chart. Let me go to the other chart real quick. So let's go to the 4 hour. Check out. See, so we got odd NZD. All right, so our odd NZD is pretty nice in profit. Looking real good right now. So our odd NZD position is currently in profit about nearly 30 pips, 25 to 30 pips. So that's looking real good. You know, it's halfway to full TP. Our odd USD position is about to hit TP1. So this went straight into profit. We're almost in profit about 30 pips. Once it hits TP, I'll send you guys an update. See our CHF JPY, this shot up as well. You know, all our positions are deep in profit. So if you guys are a premium member with K2, you guys, your profits are looking real nice right now. Let's see, CJ is up about 20 pips. EJ is looking nice too, guys. Look at that. EJ is in profit, well over 20 pips, 20 to 25 pips right there. Let's see what else we got. EU, man, everything's in profit, guys. See, if you guys are in K2 Premium, you guys are making a lot of profits, not just this week, but for the whole year. So let's see, up 12 pips with EU. NJ, wow, look at NJ. Money, guys.
Almost at TP.
Look at that. Almost at TP1, well over 20 pips in profit. The last and not least.
You got hit. Hey, I just got it right now too.
Yeah, Aaron, can you post that update? We're making hella money right now, guys.
Exactly, man. Hey,
right.
Just get the premium.
I mean, yeah, if you guys aren't in premium, you guys are sleeping on this because
Yes,
this
sir.
is profits right here. I mean, I share these trades with the public too. So if you guys are in the public chat, I mean, you guys are making money with this as well. You know, I'm not trying to hide the ball from you guys. You know, I want everyone to have, you know, a fair chance of making profits. But obviously, if you're in premium, you're going to get that premium treatment. You're going to get my trades right away, right when I spot them, and right when I take them. You guys are going to get them real time. You know, if you guys are in public, I still share them with you guys. So you guys are still making money regardless. But if you guys want to make real money, you guys got to make it to premium.
Yes, sir.
So let's see, it's 5:42. This candle is about to close in about 17 minutes. So I'm going to start scanning the chart for new trades. Let me see if there's anything else here that that anyone needs answered real quick before I start scanning for trades. Mine said he just scalped US 30 for a quick 30 bucks. Nice. Yeah, I mean, I wish I entered that one too. Damn, let me go back to US 30 real quick. I was waiting for a buy signal so I could scalp it, but I took my eyes off it just for a few seconds and I missed it. Damn it. Oh man, see, look, if I scalp this right here, what time was that? That time was 16, about a couple hours ago, or not even an hour ago. It's like, yeah, 50 minutes ago. So I missed that. I was taking a shower, I think. So right here, if I took the scalp entry, geez, it would have been 1,500 pips, man. It's all good. It's all good. You know, profits come and go.
Exactly.
You stay winning, so
There you go.
there's no FOMO there for me because I know I missed this, but I'm gonna make double, triple that maybe by tomorrow with these other trades. So it's all good. But yeah, it's looking real good. All of our positions are deep in profit, guys. So whoever's in premium, your accounts are looking real nice. But yeah, guys, I'm gonna start looking for trades because I have about. Actually, let me go through the chat real quick. What else you guys got here? Yeah, Razik said London is going to move slow tomorrow because NFP. So I think it's a bank holiday as well. So I'm probably not even going to trade anymore after tonight. But it looks like I went through all the questions. So if you guys have any other questions or you guys want me to look at anything or go over any trading theories, feel free to put them in the Q&A. And then once I'm done scanning the charts, I can go over your questions. But just for the time being, I am going to scan the charts right now for some new entries. Because, you know, we all got to eat over here. So let's see, turn on this, turn all the K2 indicators. All right, let me go down the list. Okay, our odd CAD is looking nice too, guys. So if you guys are on that odd CAD, everything is in profit, guys. So that there should be no one in the negative right now. Everything is in profit, literally.
Exactly.
No entry here. Maybe if price breaks this resistance, but it doesn't look like, I don't know, I'll just mark it anyways. I want to take this trade. We do have high impact news coming at 7. Aaron, another TP. Ooh, guys, come on, man. Whoever's not in premium, you guys are sleeping. Look at that, another TP, guys. Aaron, did you post that?
Yeah, I posted NJ right now. Excuse me.
So post NJ. I'm gonna edit my results too, just so, because we keep forgetting to update those results.
Damn, shit, we doing good.
What did I even call today? Let me check. Sorry, guys. I'm gonna check what positions I called today, just so I could update my charts because I haven't updated mine. Let's see. So where did I call today? I called AU. All right, US 30, AU. I'm just gonna update this real quick.
Excuse me.
And which trade just hit right now? That was CAD, right?
That was NG. I mean, I said NG. That's NJ and UCAD. 425 pips.
Okay, cool. I'm gonna
excuse me.
You just post up the results and I'll update my my totals once I'm done with the call. But I'm just gonna put them on my chart now because I don't want to get these all mixed up. Because we've been hitting too many profit targets. I can't even keep track anymore, bro.
Exactly, man. Okay. 1, 2, 3, 4.
Crazy, man.
Oh shit.
Okay, what else we got? You can. I think that's about it for today's call so far. I'm just gonna scan the chart. If there's any
God damn it.
Oh, we hit another TP, guys. So I don't know what to tell you guys, man. If you guys aren't in premium, you guys are not making. Well, I shared this with the public actually. So let me go to the public really quick. I think I shared all these trades with you guys. So yeah, public right here, CHF, JPY. You guys should be making money too. There's no excuses. What else do we got here? I shared AU with you guys. We just hit TP on that, so no excuses there. EJ and actually, you guys have all of these. You guys have all the trades. I just shared them with you guys late. So if you guys are in public, I mean, I'm still giving you guys, like, you guys have the opportunity to make money. But if you guys want to make more money, obviously, you know, join premium. But I've shared all these trades with you guys, so you guys should all be pretty good right now. Let me go back to the.
You said which one had hit? You said CJ?
CJ hit, AU hit, and UCAD. So
you said AU hit too?
Yeah, AU hit.
Oh, damn, what the fuck?
Just gonna mark my charts so I can remember.
Oh man.
Easy money, bro.
I'm tired.
All right, cool. So hope you guys are enjoying those profits. Let me keep scanning through the charts because, you know, we still gotta make some more. Man, there's a lot of AJ entries, Aaron, but I don't know if we should call them because we have news coming up.
Yeah, we should just chill, bro. We pretty much did a good job this week. I mean,
yeah, I mean, you guys have 1, 2, 3, 4. 5. We have about 6 or 8 wins already, guys, for today. So I might not even call any more trades for the Asia session because we have news in about an hour. So I don't want to risk it and, you know, screw up our freaking win percentage. We're doing pretty good today. I mean, it's not even that. It's not even about our win percentage. It's about managing risk. Like there's really no point. We're so deep in profit with all our positions. There's no point in us taking any extra risk to you know, lock in just a few more profits. Gee, look at. Oh wait, I thought CJ hit TP. No. Let me refresh my charts. Very nice. CJ hit.
Yeah, that's all
Oh,
strict list. I didn't get a notification, bro.
My bad. No, that was the 10 pip one. So that didn't hit TP yet. Almost. It was NJ. So it's almost. I mean, it's gonna hit. Like it's like a
Damn.
pip away, bro. It's gonna hit. So that's fine. I'm just gonna scan the charts anyways, even though I'm probably not gonna call any, because I mean there's a ton. Look, there's a ton of entries here, guys. So if you guys had the K2, you know, indicators and the strategy, you got three entries already right here. So right here, you could have entered this. The entry would probably be up here, 66 pips. It's probably gonna hit because we always hit TPs. Right here, AJ, another one, 57 pips. That could be a winner again. KJPY, entry right here. There you go, another 50 pips right there. I'll just go through all the trades just to all the pairs. So there we go. Our odd CAD's pretty nice in profit. Odd NZD, nice in profit. AU, it blew right through TP1. It's about to hit TP2. Probably by London. Right here, CJ. It's about to hit TP1. It's like a pip away. Next up, we got EA over here. No entry there. Your CAD. If this drops below the support, then it would be an entry right there. For, let's see, been locked in about nearly 100 pips off this trade. But like I said, guys, it's too risky to enter trades during news, so I'm not gonna call these. I mean, if you guys have access to the indicators and the strategy, you guys can apply it yourself and take them. But I'm just gonna sit this one out. Ooh, look, our EJ is about to hit TP2, Aaron. Whew.
Already? Goddamn.
Man, we got 2 more TPs on the way, guys. Sit tight. Sit tight and count those profits because you're gonna have to keep adding some more on there. You just stay winning, you know. I'm gonna type in TP anyways, just so you know we're ready for it.
Hey, might as well. Shit.
Yeah, so TJ is about to hit TP. EJ is about to hit TP. We have another sell entry here for EN. We were to enter a sell right here, which I would have called if there was no news. Would have locked in nearly 100, 125 pips, 124, 25 pips right there. I'm just gonna mark them up. I'm not gonna call them, but mark them up in case you guys have questions. EU, it's kind of far down, but it's making its way on up. So this is like what I was mentioning earlier. EU action was pretty slow. A lot of people think EU is a very, very volatile pair, but it really isn't. 33 pips. GA. Damn, GA dropped a lot. I mean, we hit full TP on this today, I think, or yesterday. It was like 125 pips. So this kept dropping. We could have re-entered, but we didn't. GC, no entry there. It's too close to support. GBP CHF, nothing there. GJ. Let's see how far is it from resistance. It's too close, so that's not an entry. GN. It's about to drop below the support right here. So if I enter that, probably lock in a nice 100 pips. But we're not going to take that because of news, and it hasn't broken and confirmed below the support yet. And if you guys, if you guys have access to the strategies, have detailed videos explaining how to apply the same exact strategy that I use for every signal. So if you guys learn the strategy, you guys could, apply these all on your own. GU looks like it's too close to resistance right here. I wouldn't have called that. NZD CAD is ranging. I don't like to take ranging trades, so I would skip that. NZD CHF. If this was a buy signal, then I would take it, but there's no valid entry here. We have a sell signal, and price didn't break below the support, so there's no entry there. Our NJ, wow, NJ's looking nice. So NJ just hit resistance. It might break through, it might not, I don't know. But our TP, oh, there you go.
I got it, bro.
CJ just hit TP again, guys. Woo. It's easy, guys. Easy money, man. And whoever's on premium, you guys missed out. You guys super missed out, man.
100 pips, I
How many pips did we make today? We made a lot of pips today, bro.
Exactly.
All right, another TP right there. I'm gonna put that on my notes because I like to remember. I like to count my wins. CHF, JPY, NU. Right here would be another entry for NU. So if you would enter this, would have locked in 53 pips here. But like I said, there's news. Yeah, look at UCAD, bro. UCAD about to hit TP2. Jeez. UC, if UC closes below the support, it'd be a good entry. Locking in 42 pips right there. I mean, literally back to back wins. You can't make this up. It's like, well, I'm giving you guys these trades live, showing you guys live how I identify these trades. It's super easy. But I mean, some people just don't like to win. All right, so that's cool. Looks like I've covered everything up until the 7 o'clock news. But yeah, I'm not gonna call those trades. We do have, so we have 1, 2, 3, 4, 5. We have about 5. Or there was more. There was some down here too. So there's one right here. Yeah, so there's about 5 to 10 available entries if you guys wanted to take them. But like I said, I'm not going to take them because there's news coming up in an hour. I don't want to risk it. But if you guys do have access to the K² strategy, you guys can see here, it's odd CHF, odd JPY, CAD JPY, Euro CAD, Euro NZD, and I think that's about it. There were some down here, but I didn't mark them. I'm not going to go through them again. But pretty much, if you guys want to look at available trades, those are available right now. But we're going to be safe, sit on our profits right now, and then pretty much take it from there. Let me see. EU didn't hit. No, I didn't. So I'm just going to double check these again. Cool. So we hit TPs all around except for EJ. EJ is about to hit soon, and EU. So those are the only 2 that we're waiting for that haven't hit TP1. Everything else has hit TP1. So let's see. I don't really see any other questions in the. Actually, we have one right here. So CS is asking, is there a good broker that I, as a U.S. trader, can access that provides dollar per pip versus he goes away? Not that I know of. I use he goes away. I think it's fine. I mean, if you really want to have that dollar per pip, then just up your lot size, up it to a 0.02, or maybe a 0.03, depending on how much you're willing to risk. I mean, that's just a quick fix for it. I don't think you really need to change a broker if you want to do a dollar per pip. You just need to up your lot size. Yeah, because I trade a 0.02 on mine, so I do that just to make the equivalent. But Hugo's way is it's fine. I mean, any broker you go to that's unregulated, it's going to be the same. So you're not going to find anything better if you move from broker to broker. But I know AvaTrade, I think, is a dollar per pip. I think that's what Wade uses. But they don't accept US clients, unfortunately. I would have used it too, but you got to deal with what we got. Let's see. All right, guys. So there's no more questions in the Q&A. So I'm just gonna check stuff out. If you guys have anything you guys want me to look at, feel free to let me know. Otherwise, I'm just gonna keep monitoring our current trades for the time being, just to see where everything's going. Well, there's some nice moves for the odd, not just the odd pairs, but every single pair that we had. I wasn't expecting to be that quick. Yeah, so it looks like the JPY pairs are kind of retracing a little bit, but I think they're still gonna keep pushing on up. About 7 pips from TP1 for EJ. So we probably sit tight on those. Let's see what else we got here. Yeah, so once this closes, I'll show you guys an example of how this strategy works, the K2 zone trading strategy, once there's a valid entry. So right here, we have about a minute left in this candle. So once this closes, I'll show you guys exactly how I line it up, just so you guys can see my thought process and how I identify these trades. Because honestly, the K2 strategy, all the strategies that I've created, I made them super simple where anyone can apply them. So even if you're not good at trading, if you're not good at trading, you guys can follow very strict rules that I set forth. You guys can be a pretty profitable trader. Let's see. Or you know what I could do? I could just go to I'll go to a pair that we had earlier. So I'll just clean up this chart. And what I'm going to do is I'm going to replay it just so I can, because I know a lot of people are curious as to how I'm calling all these like fire signals, and it's really simple. It's the same exact strategy for every signal. If you guys have access to the indicators, you guys can do this all on your own. So let me give you guys the requirements right here. So for the current signals, I'm using the 4-hour time frame with the K2 zone trading strategy. The only reason I'm using this strategy now is because due to coronavirus, the market's really erratic, and if you're trading on anything lower than the 4-hour, there's a lot of noise, and you guys are gonna get caught in a lot of fake outs, and it's just really not worth it. And the 4-hour just makes things a lot easier. The 4-hour candles close at specific times every single day, at 10 p.m., 2 a.m., 6 a.m., 8 a.m., and 6 a.m., 10 a.m., and then again at 2 p.m. So there's only like so many times during the day where you need to check the chart for entry. So if you guys are able to just set aside a few minutes a day to look during those specific time periods, you guys can take trades, and you guys could be pretty profitable just trading the 4-hour. But I'm going to go down the requirements right here. Actually, I'll check out GU real quick. Dave wants to check out GU. So let's see. I'll come back to GA to show you guys the example, but I'm going to check out GU real quick. All right, so GU. I'll zoom out real quick. GU looks like it's been, technically it's in a downtrend, but it's kind of like it's not, doesn't necessarily mean it's going to keep going down, but it's. So let's see. So this would technically be a possible entry using the zone trading strategy. The only problem is it's too close to this this resistance right here. It's 7 pips. So what I see happening in GU right now is you have a double top up here, and that's where this drop came from. You also have sort of a double bottom right here. Price did break below it though. So it looks like it might be coming up from there. Let's see what else we got here. Check the trend meter. It has a sell bias, but it's neutral right now. So right now, it looks like it's going to be stuck ranging within, because this candle just opened. We have 3 hours and 57 minutes left on this. So depending if it breaks above it, so if this candle breaks above this resistance and closes above it, so say if this candle, just going to try to make a little example here. So say if this candle closes above this resistance right here, this would provide for a valid K2 SR zone strategy entry. And let's see. So just for hypothetical reasons, we'll say that it closed right here, and we'll map it up. That gives you a 63 pip cushion till the next zone. So the K2 SR zone trading strategy, the way it works is that we basically trade from zone to zone. So as you can see right here, or just looking at the chart in general, the K2 SR indicator automatically plots the nearest support resistance on the chart for you. So as you can see, just by looking at the chart, I'll take off the zones right now so you guys can So these horizontal lines are automatically plotted by the K2SR indicator. They pretty much plot the nearest support, the nearest strongest support resistance areas closest to current price. So if I take those off, there's no zones on the chart. But right here, you guys have the zone. So basically, if you look at the chart, from our bird's eye view, you can see that price almost always rejects off these zones and pushes to the next zone or retraces back to retest the zone before pushing to the next zone. So as you can see right here, price tested this zone, pulled back, it didn't make it down to this zone down here. So it retraced back, tested it again, and try to push down, push back, rejected off the zone, came down to this zone, rejection, this zone right here, rejection, push back down, rejection off this zone, tried to pull up, retrace, rejection off this zone. Again over here, rejection, 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 rejection off this zone. It broke through this zone right here, and this is why I'm anticipating it to shoot on upward. So if it breaks and closes above this resistance right here, what I anticipate to happen is that it's going to come up and test the zone again. So depending if it breaks above it, if it closes below, so say this closes, so say if this candle right here closes bearish and it closes as a red candle below this support right here, then it might come down. So let me go and turn on the, so if you go ahead and plot, if you tie the K2SR indicator with the K2 momentum indicator, if we had a bearish candle like it did right here, and there was a sell signal, odds are price is going to come down and test this zone. And it's the same thing that's been happening, throughout the whole time. Like right here, we have a sell signal, bearish candle, and then look what happens. Comes down to this zone right here. Same with right here. We have a buy signal. It's indicating a momentum swing upwards. And then it rejected off this zone. We got a buy signal. What does it do? Test this zone right here. Rejected off the zone, came on down. We had a sell signal right here, closed below the support. What do you think it's going to do? It's going to come down, test this zone right here. It's exactly what happened. So with this situation, we have a buy signal. It rejected off this zone. If price closes above this resistance, what's it going to do? Test this zone. If it comes back down with a sell signal like it did right here, closes below the support, what's it going to do? Test this zone. So it's real simple, guys. If you guys, it's literally all price does is it rejects off zones and then it tests a new zone as it's been doing throughout this whole time. So right here, if this candle, it's a strong bullish candle. So if it closes above this resistance right here, odds are it's going to come and test the zone, and you have like a 65 pip cushion for you to catch some profits off there. So pretty much if this candle closes above, then I would enter a buy. Up to, the next zone, which is like right there, 60 pips. I just wouldn't enter right now because it's stuck between these two zones right here. So it's probably just going to keep rejecting until price, chooses the direction to go at. If it's a bearish candle and it closes below, but with no signal, then I wouldn't take it. I would wait for the next candle, which is probably going to close again. It's going to push it up again and attempt to break these zones and confirm above it. And once it does that, then I'll take a buy. But right now, price is really uncertain because it's stuck within these two zones. It hasn't really broken above it or below it. So until it does one or the other, then you can have a better idea as to, what area price would be moving towards. Let's see, Mayan said, could we do a GU buy stop right now? No, I wouldn't. So like I was saying, price hasn't broke above this zone right here. So once it breaks above this zone, like it did right here, let me show you an example. Let's get a buy signal. Our US 30 hit full TP, guys. So if you guys took my US 30 call, 2,000 pips. You're welcome. Let's mess with you guys. Aaron, are you there?
Yeah, I'm here.
All right, man. Post up those profits for US 30. 2,000. So let's see. So yeah, I'm going back to the same situation right here. So what you're waiting for is you're waiting for price to break this resistance. So once price breaks that resistance, I'm trying to find a good example here. This isn't a good example because price did break the resistance right here, but it already tested the zone. So the thing is, you're not going to take that. It already rejected off that zone. But similar to this situation right here, like say there's an imaginary resistance right here. So right here, we have a buy signal similar to right here. And if price broke this zone right here and then it had a buy signal, then that would give you an opportunity to enter this trade. So you'd enter like a buy stop right there, a buy stop right here. So as price came up, it would fill your order like right here. And then obviously it would retrace back a little bit. And this goes back to what I was explaining earlier, why you have to follow, specific stop losses, because you need to be able to eat this drawdown before it goes to where it's supposed to go. So same situation right here. If this candle closes above the resistance, like we did with our imaginary resistance right here, then you could enter a buy stop or market order or whatever you want to do, and then you can pretty much write it up to the next zone, which should be right there. Otherwise, right now I wouldn't enter it because there's no catalyst basically identifying any entry there. So I would just wait for it. Once you have confirmation, then I would enter. But yeah, I'm gonna go back and check at US 30 because that made me pretty happy because people were tripping earlier saying that it was a sell and that people were trying to go against my trade. But I feel sorry for whoever went against my trade because you lost a lot of money.
For real.
Because we won right here. Let's see. So John Harris said, do you think the market will somehow adjust to your strategy? And if so, could it be adjusted? Yeah, it could. So I created this strategy from scratch. I created the indicators, I created the thought process, the logic, everything. So if there's anything that happens that, affects the market, pretty much how it did right now with coronavirus, our original strategy was on the 30-minute chart. This strategy, not this strategy, but well, even this strategy I created like 2 weeks ago. The 1-a-day US 30 strategy, I just created that strategy. So the thing is, I've been trading for like 8 years now, so I'm able to create my own strategies based on current market conditions, because I understand how to read charts, and I can understand how market makers and institutions pretty much react to how the market is at that specific point in time. So this 4-hour trading strategy, the zone trading strategy, I just created this indicator last month. This is a brand new indicator, the K²SR version 2. Previously, this indicator only had one line. There was only one single line here. But due to current market conditions, I was able to figure out how the market was moving. And what I did was I created a brand new indicator, the K²SR version 2. And now we're able to see where price rejects from. So I created this from scratch, and I created this strategy from scratch. What I did was I created this indicator first. Well, okay, so this is what I did first. I'll show you like my thought process behind all of this. So first we had this original indicator. The problem with this indicator is that it only has 2 lines there. It still works, but it only has 2 lines. So the thing is, if you understand how the K²SR indicator works, you can see this is the resistance and the support. And as price moves, I'll zoom out so you guys can see. As price moves, the K²SR automatically adjusts the strongest support resistance for that time. So you can see right here, support adjusted to down here, resistance adjusted to up here. Again, right here, resistance adjusted to this area. Let's see if it adjusts again. Support adjusted to this area, and so on. So the problem with this is because once price breaks this resistance and it hasn't adjusted to where price currently is, I wasn't able to see where price was likely to reject from on that point. So what I did was I'm like, okay, what if I was able to put multiple lines so I could go back in history, as far as I want to go, and plot the previous lines before they adjusted. Because as you can see, as they adjust, you're not able to see where the old lines are. So you can see it's adjusting. So right here was where resistance was, and then now you can see they keep changing. And the thing that I realized was that during these current market conditions, price respects these support resistance areas almost every single time. So instead of just having one line on there or two lines, I adjusted it to have lines far back. So you can see where support resistance is tested way back here. And you can change the data. So right here, I have it going back 100 bars. So that's 100 candles, 100 4-hour candles back. So I can see back in the past 100 candles and see where support resistance was strong. And it calculates the strongest support resistance as to how many times it's tested that same exact price point. It's not the zone, it's the same exact price point. So this point right here, 1.31742, this specific price, exact specific price, was tested, more than 2 or 3 times in the past. And that's what makes it a strong resistance. Similar with these supports over here. All these lines here are very strong support resistance. They're not tested just once. They're tested, 2, 3, 4, 5, 6, 7, 8, 9, 10 times. And what you can do is you can adjust the parameters here. If you want to go farther back, if you want to go years behind, instead of 100 candles, you could change that to 500 candles. And see, it doesn't really change because these, or it did change right there. So right there, it changed a little bit. It took some time because it had to go and calculate all the old data. But it pretty much adjusted to what the strongest support resistance is, 500 candles back. But I don't trade that far back. I'm not a swing trader. So I want to know where the most recent support resistances are. So I'm going to go back 100 candles, and that goes back, I don't know how many days. Let's see, we'll do the math here for you guys. So 4 times, obviously it's 400. So 4 times 100 is, 400, divided by 24. So it goes back 16.6 days. And that's all I really need. I don't need to go back, 100 days. I'll go back 16 days of support resistance to see, where price is tested 16 days back, because I'm only going to trade for that day. So I want to see where the strongest areas are. But yeah, back to my explanation as to, how I can adjust my strategy. What I do is, if this strategy stops working, I'll just look at the chart and I'll see, what's wrong with it. Why is it not working anymore? And then once I pinpoint what's not working anymore, then I'll make adjustments to the strategy. Maybe I'll create a new strategy, create a new indicator. But I always find ways to win. Like, this is my full-time gig. I'm not doing anything else. All I do is trade and help you guys out. So, like, regardless as to market conditions, or if the thing is, like, we're a small fry in this market. The market makers aren't going to change the market just because I'm winning a few trades here and there. But if they do, then I'll find a way to fix it, and that's pretty much just how I adjust things to current market conditions. So our original strategy was on the 30-minute time frame, and it still works. It's just that it's a trend continuation strategy based on momentum. So the thing is, as you can see, it still works. You can see here it's been hitting. So like the original strategy, all you really have to do is match the colors. So if you have a green vertical line, this is indicating that momentum is swinging upwards. And then this indicator down here is the trend meter. This trend meter shows you the overall trend on 4 different time frames. So right here, I have it set to the 30-minute, 1 hour, 2 hour, and 4 hour, because I want to see what the intraday trend is. I want to see what the trend is on the 30-minute, 1 hour, 2 hour, and the 4 hour. I want to make sure they're all aligned and they're all trending in the same direction, so that I could trade in that direction. Because obviously, like I said earlier, this is a trend continuation strategy. So if you have access to the indicators, you can see here, you guys can change the time frames. If you want the 30-minute, change it to 30-minute. If you want to change the 1 hour to the daily, weekly, depending on what type of trades you're entering. If you're entering scalping, obviously you can change it, to the 1 minute, 3 hour, 5 minute, 15 minute. If you're swing trading, you want to see what the overall trend is on the long term. So you can change it to the 4 hour, the daily, weekly, monthly. But like I said, this is an intraday trading strategy. So what we do is basically, we want to make sure that we want to trade in the direction of the trend. So when the overall trend on those 4 time frames is trending upwards, it'll turn green. If it's indecisive, where one time frame is trending up and the other time frame is trending down, it'll be blue right here, like neutral. And if it's trending downwards on all 4 time frames, it'll be red. So on the 30-minute, 1 hour, 2 hour, and 4 hour, if it's trending downwards on all those charts, then it's going to be red down here. But going back to my explanation earlier, so this strategy, it stopped. It technically wasn't not working, but what was happening was that due to the choppy markets, it was hard for us to catch an overall trend, because as you can see down here, there's barely any overall trends that can be caught on those 4 time frames. You can see it's blue down here the whole time, so we would have missed all of these trades that we could have taken. But as you can see here, if you're still applying the strategy, basically all you have to do is match green and green. So if you have green and green, you'll enter a buy. So if you entered a buy right here, you would have locked in 50 pips. Again, right here, it's green and green. You would have locked in another 50 pips. But the problem with this is that, you know, only so many entries appear at a day now. Or actually, let me see. So this is the 30th. Let me take this off. So as you can see, the strategy still works. But as you can see, you know, there's going to be days where there's no trades. And that's why I had to change the strategy up. Because the thing is, you know, since people want signals, I'm not able to give signals if there's no entries, because I'm not just going to give, you know, random trades. And as you can see right here, like here's one loss. But let's see if there was a reason for that. Because we also tie in the SR, the support resistance indicator. And then, yeah, so it looks like this was just, you know, a random loss right there. Looks like price came in reverse. And that's why we had to change the strategy from our original, because the thing is, although it does work, so you can see right here, straight winner, right here, straight winner. And if we go back, I mean, the wins are always going to outweigh the losses. If the strategy stops working, then I'll tell you guys and I'll take the strategy down. But the strategy clearly still works. Right here, you would have won, you know, 50 to 100 pips, 50 to 100 pips right here. One loss for like 50 to 100 pips. So one win, one, 2, 3, 4, 5. So we had 5 wins and 1 loss right here. So even if you're applying the original strategy that, you know, doesn't appear as often, you still would have been in profit. So that just goes to show that, you know, if the market does change and we have to make adjustments, I'm able to make those adjustments. Like, that's not going to stop us from winning. You know, this is my livelihood. I do this every day, and this is my passion. So regardless as to what kind of market conditions, you know, appear, I'm going to figure out a way to win, or regardless of all that. So I hope that answers your question. Let's see what else we got. Keith is asking, do you have a 20 pip and dip strategy? I guess you could consider this a 20 pip and dip strategy. So right here, you know, if you can match colors, you can make money, is like what we like to say here. So if you can match red and red right there, and then you want to do your 20 pip and dip, go ahead and put your 20 pip and dip right there. And then you just change that to 20. 20. And there goes your 20 pips. Again, right here, you have another, if you can match these 2 colors, red and red, enter that right there. 20 pips. I mean, you could, these strategies are pretty versatile. You can apply them however you want to. Yeah, and it looks like it hit 20 pips on that first candle. So once this candle closed, you would have entered on the open, which was right here, and it dropped straight down to TP, as you can see right there. So if we go back and replay it from right here, so you would have entered that on the close of this candle, straight to your 20 pips right there. See if I can find it. There should be another one right here. I'm just going to take these off so it's a little easier to see the chart. So there you go, two trades back to back, 20, 40 pips. What else we got? We're looking for another sell. So right here, like I said, it's easy as matching red and red, green and green. Right here, we have another sell candle. You want to do your 20 pip and dip, enter right there. Change this to 20 pips. I mean, honestly, I wouldn't do 20 pips because your stop loss is way too close. Like if you're if you're basing your strategy on pips, odds are you're probably gonna lose more than you win. because the thing is, price can always retrace, especially for a big move like this. This candle right here is a 34 pip move. So the thing is, price is likely to retrace back a little bit, at least slightly. And if it retraced back 20 pips, you would have lost. What we recommend is you put your stop loss at the previous swing. So you can put it like, you know, up here, and then you can still have your profit for 20 pips. But the thing is, you want to be able to eat this drawdown before it goes in your direction. So I mean, let's just run it through and see if it actually hits. So here's your 20 pip strategy. Boom, right there. Within 30 minutes, you would have made another 20 pips. So there you go, 60 pips back to back to back, no losses. Easy as that. But I mean, if you want to trade it properly, like right here, you could have traded, put at the previous stop. Or like I was saying, you'll put your stop loss at the previous swing right here, 23 pips. So instead of your 20 pips, why don't you just add on another 3 pips to your profit right there? Again, right here. Right here, I told you guys to put your stop loss at the previous swing, which would be up here, 58 pips. You know, why stop at 20 pips? Why don't you get 58 pips? Right there, you would have hit 58 pips. You're cutting yourself short if you're only aiming for 20 pips. You could have just doubled your profit if you just, you know, trade properly. So right there, another 58 pips. Again, right here, like I said, if you're trading properly and not just, you know, going for that 20 pip. Honestly, if you're doing a 20, if you're looking for a strategy that's just going for 20 pips and you're basing it off you're basing your profits off a specific profit of pips or money, that's just gambling. You know, you're not really trading. The thing is, you have to analyze the chart and you have to see, you know, where price is moving, and you have to, you know, there's a lot of different things that come into play. But like right here, so we moved it to the previous swing right here, 48. So let's do that, 48. Like instead of your 20 pips, let's go for 48. You know, why cut yourself short? Let's put it through. There you go. See, right here, you missed out on double profits on three back-to-back wins instead of just, you know, honestly, I can see where you're coming from, because I used to trade that way when I was a new trader too. Well, when you're a new trader, you're kind of scared to take these moves because you don't have a system that you follow that you know truly works. The thing is, I've been using this strategy for like 5 years now, just this original strategy, and it's been working for me pretty good, and that's why I trust it. Like, it doesn't matter. Like, if I saw this right here, I know a lot of people would have tripped out and probably would have closed out their trade. So let me go back. And then we'll look at this right here. So me as a new trader, I can see where you're coming from, because, you know, this is a big stop loss, 58 pips, and I trade standard lot. So if I lose this trade, I'm gonna lose $580 because each pip is 10 bucks if you're trading a standard lot. So, you know, I feel your pain. Like let's see this. So it comes down right here, and me being a new trader, I don't move my stop loss in profit. That's one thing that you have to know as well. So as price moves in profit, you have to remember to eliminate your risk. So if you moved your stop loss to break even or in profit, let's say I probably moved in profit about like 10 pips. So 10 pips is right here, right? So let's drop this down a little bit, 10 pips. So at this point, you're risk-free. Like, once this happens, if it pulls back, fine, you get stopped out, you still made profit. If you're trading standard lot, that's $100. You know, how can you say no to $100? So right here, let's see from the next candle, it retraced back. So right there, you would have gotten stopped out with 10 pips. But let's go back to the full move. If you decided not to adjust your stop loss, like I said, once you become more experienced at trading, you know, this won't bother you anymore. Because I know back then it used to bother me all the time. Whenever it went into negative, I would trip out and I want to exit my trade. So like right here, price pulled back. You know, being me and knowing that I've applied the strategy so many times in the past, I've seen this pattern before. Like, price always pulls back before it shoots down in profit. So right here, you know, a new trader would probably trip out and exit their trade for a loss. The thing is, if you trust the system and you know the system works and you let it just play out, you would have made the full profit. And this is how they trick you. This is how market makers and institutions trick new traders, because they try to scare them by pulling the price back. But since you have your stop loss at the previous swing, then you know that once it crosses this area, then odds are it's probably going to reverse. But if it doesn't cross this area, you have a good enough chance for it to keep going down, because you know, price is establishing lower highs. So right here we have a, you know, a higher high, lower high, lower high, lower high. Right here might have scared me a little bit, but the thing is, it came back down. So as it came back down, it starts off a new cycle. So this is a higher high, a lower low, lower high, and then once I see these two lower highs, then I'd be cool, because I'm like, all right, cool, it's gonna come back down. If this came all the way up here, so if this price came all the way past this this lower high, then I would start tripping out, because I'm like, all right, price is probably gonna keep going that way, and then okay, it stops me out, so be it. But the thing is, if you're able to understand, you know, the system that you're trading and you trust it, then if you just let it run, you could, you know, you could be a big win could be prepping up for you. But yeah, I hope that helps, Keith. I just saw your message. Yeah, definitely. Hope that helps. If you have any other questions, I mean, feel free to let me know. But I don't think you should follow a 20 pip and dip strategy. That, you know, that's like a beginner's way to trade. But I know if you're new, then, you know, probably that's probably your problem right now, and that's probably what you need to work on. You just need to work on trade psychology and, you know, understand how the market works. So let's see. We have one more question from Dion. Dion said use the trend meter on the 4-hour strategy. No, Dion, I don't use the trend meter on the 4-hour strategy, because it's the here, hold up, let me put on the so the reason why I don't use the trend meter, I look at it sometimes, but not very often. See, the reason I don't use the trend meter is because there's like literally no trend, or if there is a trend, it's hard to it's not stable. Like, it'll only stay for a couple candles and then it disappears. Not like, you know, how it used to be before, when it was trending like pretty heavily. So I don't even bother using the trend meter on the 4-hour from the 4-hour time frame. Also, because since they're 4-hour candles, you know, you can see the trend just by looking at the chart. Like, just by looking at this, you can tell it's an uptrend. Looking at this, downtrend, uptrend, downtrend. Like, you don't really need the trend meter once you start trading on the higher time frames. And also, for the higher time frames, like I said earlier, like for this exact strategy, price always rejects it. It pretty much just goes from zone to zone. So if it rejects off the zone, you pretty much know it's going to come down to the next zone. So even if you enter this trade for a sell, you still wouldn't have gone stopped out, because the swing's up here. So even if you were to enter, I know there's no entry here, but I'm just using this as an example. So if you entered a trade right here, I mean, it's kind of a bad example because you wouldn't hit TP, obviously. But yeah, if you enter this trade, you know, you put your stop loss at the previous swing, and if you want to let your profits run, then you can let it run. But you can see here, price doesn't pull back. I mean, if it does pull back, then yeah, you'll get stopped out. But then you'll have, you know, peace of mind that you actually apply the strategy properly. But this is why I don't use the trend meter, because as you can see here, price pretty much bounces from zone to zone. So bounce off the zone, bounce off this low, bounce off the zone, and it pretty much just goes from zone to zone. So right here, this zone to this zone to this zone to this zone, and then so on. And that's pretty much why I don't use the trend meter. But yeah, it looks like we went through all the questions. So if you guys have any other questions, feel free to let me know. Put them in the Q&A, and then we can go over, you know, any theories or any pairs you guys want me to analyze. Let me see what else we got here. Check out the chat real quick. Saw that message.
Hey, Sean, go to US 30.
US 30?
Yeah.
Yeah, I was just, that's right here.
Hey, which chart are you using? Because on mine, it's not showing that it hit.
What are you talking about?
Yeah. Mine is not showing that here TP. Which one are you using?
Which I'm using the Wanda one.
Oh, okay, that's probably what.
Which one are you on?
I don't know which one I'm using. Shit. Let's see.
I mean, it should still hit, depending on. I mean, it might be the time frame that you're looking at.
Let me check. Hold on. It probably is.
All right, I'm gonna look at UJ real quick. The teeth. All right. So the K2 indicators. So right here we got a sell signal. There's news coming in about 45 minutes though, so I probably wouldn't enter anything. But if this candle closes with the K2 sell signal, you can see it disappeared. You'd have to wait for the candle to close. But if it closes with this signal intact, then I can see it coming down to test this zone. Like I said from the previous analysis, price generally rejects off the zone. So right here, it rejected off this zone, and it's making its way down. It didn't touch this zone yet, but it got pretty close. So what I'm anticipating is that it retraced a little bit, and then it's trying to finish the move down here to make it to the next zone. So I would sell this if this candle closes with this signal in place. I might call this trade later because this candle closes in a couple hours, about 10 o'clock. So in about 4 hours, if that candle closes, I might make that call for our premium members. And then that's going to be a nice move down for about 32 pips. So, I mean, it's a quick, nice profit. And then it's probably going to reject off. And it's probably going to give us a buy signal. And then when it gives a buy signal, it's probably going to come up and test this. It's probably going to come up and test this this resistance, or even up there. So it's pretty good. That's pretty much what I see happening right now. But I personally wouldn't enter this right now because there's no catalyst telling me, give me any type of indication as to which trade to enter. You always got to make sure that if you have some type of system that you're applying, if it's if it's not the K2 system or whatever strategy you're trying to apply, then make sure that you follow those rules and make sure that there's a valid entry there. Like right here, there's no valid entry for me, so I wouldn't have entered this trade. But if there was, then like I said earlier, if the sell signal appears, if it closes with the sell signal, then I would take a sell on that. But it looks like it's here, I'll go on the shorter time frames just to see what's going on. It looks like there's some support right here. So thing is, like just looking at the higher time frame, it looked like it was going to break past that. So yeah, 25 pips. I'm anticipating it to probably break below it, but it did test this support right here. So what it might do is it might reject off this area before coming and making its way down, which is it's not that big. Yeah, it's about 20 pips. So if you're going to place your stop loss, it would still be up here. You'd have enough cushion, about 22 pips. So, but yeah, I wouldn't go against the momentum. The K2 indicator right here, the momentum indicator, it shows you the direction of momentum. So you definitely don't want to go against momentum. I'm not sure if you have the indicator or if if you have an indicator that's able to show you momentum properly. But pretty much I wouldn't go against momentum. So right here we have a sell signal. So I would only take sells. I wouldn't be taking any buys. Trend meter is neutral right now. So there's no real overall trend. But this is pretty much what I see happening. Let's see. John wants us to check EJ. So EJ is probably moving in the same direction. Let's see if I can check it out for you. Let's go to EJ real quick. Yeah, so right here, for EJ position, I don't know if we should close EJ because the thing is it rejected off the resistance, so it might be coming down.
Yeah, or
Like I don't know if we should close it in profit or just let it be.
Where was the entry at? Yeah, it could possibly retest that resistance and head back down. Oh, it already did.
Or he did, that's what I'm saying.
And it almost hit TP too. That's the crazy part. Or TP1.
Yeah, the TP was too close. I should have put a little lower. Same situation with EJ. Right now, it rejected off this resistance on the 4-hour, so it looks like it's retracing back a little bit. This doesn't necessarily mean that it's going to come, crashing down because we have no sell signal. We still have the buy signal here, so momentum is still in a buy bias. But yeah, we'd have to wait longer to see what's going to happen next because even on the 30-minute, it's still in a buy momentum. Momentum still swinging upwards. But the resistance is right here, actually. So what might happen here is it might come down, test this, not resistance, support. Support's down here, so it might come down, test the support, which is about, it's not even that far, it's only 12 pips away. And then it might correct upwards. But it is in a small retracement pullback right now. It's in a pretty strong uptrend on the 30-minute, so I think it's probably going to continue on upwards, but and we won't really know until the candles give a little more clues, a few more clues to determine the direction. But it's still in the buy bias, so I wouldn't go against the momentum, and I wouldn't go against our trade either because we want it to go up. So I would probably just hang tight and see what happens because right now that there's really no catalyst indicating the direction of price. The bias is still a buy, but there's no catalyst telling you that price is going to come down. Just because it's a bearish candle doesn't really show. Let's see. CT said, "Don't you have a reversal trade for the short trades? Too close to support and mixed colors, meaning." Yeah, similar. Like we have the pullback strategy that we apply, but the problem is that I don't think, yeah, because the trend meter isn't trending right now. But the thing is, if it was yeah, so like right here, like what CT is saying is that we have a pullback strategy. It's similar to the original. So the way I identify a pullback is if we have an overall downtrend like we do right here, and then we have a momentum buy signal like we do right here. So in this situation, this wouldn't be a buy momentum. This would just be a a short-term momentum swing upwards. As you can see, it was clearly it didn't even push up a pip. It doesn't seem like. Let's see, maybe a pip or two or less. But so in this situation, if we're applying the K2 pullback strategy, what we do is we identify the overall trend. So down here we have an overall downtrend, and then we identify a pullback signal, which was this one right here, because it's a momentum swing in the opposite direction of trend. So once we see this, what we use is we enter a sell stop on the low of the pullback candle, because the way that we see it is that price is only pulling back, and as soon as it corrects to the overall trend, it's in a compression down. And that's exactly what happened right here. So right here, we had a pullback candle. We put a sell stop right here. And as soon as price crossed right back down, it triggered it and went straight to TP for a nice 43 pips right here. So this would be the pullback strategy. It's still applicable, and I still use it every once in a while. But like I said, right now, I only like to use the 4-hour K2 zone strategy. Let's see. Yeah, I think that's about it. for that one. Let's see. All right, cool. Hope that answered your questions, John. Your question, John, for EJ. I would just hang tight. I still see it coming on up, but it's probably gonna take some time. We're also in Asia session, so it's not gonna move very fast. It's probably gonna be pretty slow until 10 o'clock when Asia closes, and then closer to midnight once Europe, London session opens. Mine said to check out NASDAQ, so let me pull up NASDAQ real quick. So it looks like NASDAQ is in a pretty strong uptrend. The trend meter is also green. Oh yeah, so pretty much the strategy works on all assets. So you can use it on Forex. You can also use it on indices. Right here, you can see we have a trend meter is green. We have a buy. So if you would have entered this right here, you could have locked in, I guess about 1,000 pips. I'm not sure how NASDAQ pips are counted. I don't really trade it. So right here, 1,000 pips. Again, right here, you just match green and green. We have a buy signal plus the trend meter is green. Took that trade right there. Another 1,000 pips. Again, right here, we had a buy signal. Matches the trend meter is both green. And then this trade would be active. So, if you're taking this trade, I would only take a buy. It's definitely a buy bias. And this trade hasn't completed yet. So it still has its way to go. So hit full TP. So personally, if you're taking any trades for whatever any strategy you're applying, I would look for buys. I wouldn't just enter any buy. This is actually a really late entry, so I wouldn't even enter at this point. You're supposed to enter down here, so you'd be entering 600 pips late. So I personally wouldn't enter this, but I do see it pushing on upwards. Let's see. How do you determine how much you take profit should be? It just depends. It depends on what you're trading and what time frame you're trading on. So if you're trading on 30-minute, obviously, it's going to be a lot smaller. What I do is I always put the stop loss at the previous swing, just like right here, 500 pips. And then I put the TP at the same area. So if you took that, you straight win. Generally, I place I determine the take profit based on the stop loss because I trade it on a 1-to-1 risk-reward ratio. And my win percentage is pretty high, and that's why I'm able to apply the 1-to-1. But that's pretty much where I place it. I don't place it at the previous zone because the zone isn't, price isn't guaranteed to move to that next zone. But odds are price is probably going to move the same distance from the previous swing, because if it's going to create a new swing, it's going to move at least that far to create enough distance between the previous swing to the current entry where we got the signal as it creates another swing upwards. So I base my TP based on the stop loss. So whenever I enter a trade, the first thing I look for is the previous swing. So if I enter this trade right here, I don't look for where I'm going to take profit. I look for where the stop loss is. So the previous swing is right here. I'm going to put stop loss slightly below the previous swing. So I'll just round it to like 600. And that's how I know where my profit target's going to be. I put it exactly the same distance away from the stop loss. And that's pretty much where I determine where the swing is. So right there, locked in 600 pips. Again, similar right here. I probably wouldn't consider this a swing because it's way too close. So I go to the previous swing. Previous swing would be down here. So I move my stop loss slightly below that previous swing. 900 pips if I round it up. And there you go. There goes the previous swing over there. So that's pretty much how I determine where the profit target is. But yeah, like I said, it's in a strong uptrend, and we do have a buy bias. So I personally would take any type of buy entry depending on your strategy. I don't really use the zone trading strategy on indices, although it does work. As you can see here, price usually works pretty well. So right here we have a buy signal. Price broke the resistance right here. So we would have entered on the open of the falling candle right here. We put price at the previous swing, which is probably right here. So let's round out to 1500. So if I did take that trade, it would have hit profit target right there, straight profit target. The only problem with trading the zone trading strategy on indices is that the 4-hour candles they're pretty big. So unless you're able to, eat this drawdown, because it did pull back right here. It pulled back about 900 pips. So if you're not able to eat that drawdown, you're gonna get stopped out or margin called out if your account's too small. So although the strategy does work, if your account's too small, you're not gonna be able to take this trade. And that's why I don't really call indices very much, because the way that I trade is going to require that I follow my requirements, and a lot of people aren't going to be able to eat that type of drawdown. Mine's asking, which time frame do you recommend for trading NASDAQ? For all indices, I don't trade them on the higher time frame. I only scalp them, so I always go on the 5-minute, and then I pretty much scalp it as I see scalp entries. If you look on the course, I have my scalping strategy there, and I just scalp it pretty much because technically not NASDAQ, because I don't trade NASDAQ. The only indice that I trade is US 30, and it moves really fast. You're able to scalp through it pretty quickly. But I know a few people were asking me whether NASDAQ can be scalped on a 10-minute, and technically it could, but I haven't done it, so I can't really say from personal experience, if this would be the best time frame. I would still trade on the 5-minute. And I think Curtis and a lot of the other guys, they've traded on the 5-minute for NASDAQ and S&P. So I'm pretty sure it still works, even on this asset as well. So personally, if you're trading indices, I would master the scalping strategy, because I've used it before and I've made a ton of profit, just scalping US 30 all day. Like I can make profit like upwards to like, 2,000 or 3,000 in one day, just scalping it all day. But I've gotten tired of, staring at the chart all day, and it is exciting scalping. But the thing is, once you have a big loss, it's going to take a toll on you. So that's why I don't really scalp anymore. I do scalp within my big trades, but I don't scalp just to scalp anymore. Let's see. Sebastian said, NC from the 5th full TP. Aaron, did we call a trade for NZDCHF? Let me look at my list. Well, I know we called it. I don't know if we already said it. I don't know if we hit stop loss or something. Let's see, from the 5th. Oh yeah, it stopped us out. Oh yeah, because I remember this. It pulled back, it stopped us out, and then it literally shot straight up. Bullshit. I mean, yeah. I mean, it happens. We just have to eat those losses, but this just goes to show that the strategy still works. I probably put the stop loss a little too close. That might have been my mistake. Looks like, yeah, so the entry was right here. I don't know. Market was acting, it was tripping this day. So right here, we entered. Yeah, it's some fucking bullshit, bro. Look at this. It literally it kissed our stop loss, and then it shot straight to TP. Honestly, the stop loss is probably just too close. That was probably my bad, because technically, if we're using, the requirements that I usually require, stop loss would have to be way down. It still would have been fine, because stop loss would have been like 110 pips away. So technically, this would have been TP1, and we would have triggered TP1. But this was my bad. My bad for like putting the stop loss too close. The reason I put it too close was I think there was something going on that day. I don't know what the 5th was. That was like Wednesday, I think, or Tuesday. And for some reason, I just put it close. I probably put it just a little too close, because yeah, 50 pips is way too close. but it literally just touched the stop loss and then shot to TP. Can't win them all. Let's see, Dion said just heads up. I think there's odd news in about 7 minutes. Hey, Eric, can you send a?
I thought it passed already.
Oh, isn't it at
Yeah, it was at 6:30, bro.
Oh,
Yeah, I think they changed the time, bro, because it was at first I thought it was at 7.
That's what I thought too.
I think they changed it at the last minute or something. I don't know.
Yeah. Yeah, news release. Yeah. So it was released already. So I mean, we forgot to remind people, but it's all good. It's all good because we're hitting TPs. Let's see. Damn. Yeah, we missed this trade. If we call this AJ, it would have been in profit. Very nice. This AJ would have been in profit. 20 pips. It's all good. Let's see. Mine said US 30 is just too volatile for a small account. Yeah, no, definitely. And that's the reason why I trade it. Because the volatility helps you if you're scalping. Like you want to trade something that's highly volatile because you want to get in and out of trades very quickly. And that's, I mean, if you're going to be scalping, you want to trade the most volatile pair so you can, get in and out of trades and just keep stacking profits back to back to back. But yeah, if you can't trade US 30 because it's too volatile, which makes sense, go ahead and try it with S&P NASDAQ. Just one thing that I have to remind you is that although they do move in the same direction most of the time, that isn't the case always. Like on Monday, NASDAQ was in profit while US 30 was negative. And they don't always move in the same direction because although they have similar stocks, some different indexes focus on different stocks. Like NASDAQ focuses on tech stocks, and that's why it was doing so well. And the US 30 only has 30 stocks, and they're not all tech stocks. So if some of their stocks are failing, then it's not going to move in the same direction as NASDAQ. But yeah, you can still apply the same strategy both ways, and then see how they work. But you just gotta stick to the requirements and make sure that you're applying them properly, and you should be fine. Let's see. All right, looks like we're all done with questions. So if you guys have anything else, it's about to hit 7. We've been on this webinar for a little over 2 hours now. So if you guys have any last minute questions, feel free to toss them out. Otherwise, I'll be available in the Telegram if you guys want to ask me anything specific, if you guys want me to analyze anything. So I'll just hang around for a little bit, keep looking at the charts. But if we don't get any questions within the next 2 or 3 minutes, then I'm just going to sign off, and then I'll start uploading this video to YouTube if you guys want to watch it again later. But let me see if there's anything that we can enter right now. Kind of want to enter something because I missed all those trades due to the news. Let's see. KJPY. KJPY could be all right, it looks like. Anything else here?
Damn, we missed USDCHF. That could have been nice. Excuse me. Oh, so you already had to look mapped out.
Yeah. Earlier I was looking at possible entries. Yeah. That'd be cool.
I think the US pairs may drop tomorrow for NFP.
Yeah, I mean the thing is that's what everyone's anticipating. So I don't, they're not going to make it that easy. They're probably going to spike it around. They're probably going to what they're going to do is they're probably going to drop it a little bit. They're going to drop it like a little bit so people put a bunch of sell orders, and then they're going to pump it up just to stop everyone out, and then they're going to drop it back down. That's pretty much what that's what they do. So I'm personally just going to stay out of the market because it's just too much of a risk to stack up a couple pips. I'd rather just trade properly when market conditions are normal, and enter trades that way.
Yeah, there's a lot of Canadian news as well tomorrow. So
Hey, Dion, I'm gonna I'll unmute you so you can talk. Let's see. Hey, Dion, I saw you raise your hand.
Oh,
Hey, what's up, Dion? How's it going?
good man, everything good. The question I wanted to ask ever since, remember, I told you that well, that's when I now got access to the new indicator, the SR. The only thing that confused me a little bit, although began to understand it more as I went along, was when the lines become so close, is it because of the momentum of the market starting to go into consolidation, hence why the SRs are so close, or is it just based on the time frames as time go along and it starts to adjust?
Yeah, exactly. So the way that the K2SR plots points is that it plots point where price has reached this specific point. So like right here, we have a resistance that's lined up here at 1.54131. So this specific exact
Right.
price was rejected from at some
Mhm.
other point in time. So as you can see, if you like kind of trace it down, you can see it
Right.
goes and it rejects exactly off the same point right here. So that's why this line was formed, and the same thing happened for every other line. But yeah, so like you said, if you're on a shorter time frame and price is consolidating, odds are price is going to go and reject off that specific point again in the future. So like right here, this is the 4 hour. It's kind of spread out because price it doesn't reject as often because the candle only closes every 4 hours. If you go like on the 5 minute chart, you're going to see a lot of lines. Well, yeah, see like this because price, like when it's in consult, it's kind of moving around. So I'm gonna go to an area where there's more consolidation. I'll see like right here. So if I go and I play over here. Yeah, see if you go in this area, since the time frame is so small, price will
Yeah.
reject more often than it does on the higher time frames, and that's why there's so many lines. But those lines are there for a reason. It's so that you can see that that's the area where price is probably going to be manipulated or where it's going to reject from. The thing is, as you know, like a lot of banks and institutions, they use a lot of algorithms to trade now. So what they do is
Right.
they have the robots trade from specific price points, like where these lines are. So the thing is, you kind of want to update these areas because the thing is, price is probably going to be manipulated once it reaches one of these areas.
Right.
So you can see right here, it came down, and then you can see it consolidated. Probably right here, this is where the algorithms were trading back and forth. So they identified this as a resistance. So one bank is selling right here, one bank is buying up here, and they just keep fighting each other until one gives up, and then
Right.
it breaks through it. Same thing again right here. It just keeps fighting through these little price areas, and then once it breaks through, like it did right here, this is when you want to enter a trade when there's a big open area, because you can see right,
Yeah. That.
exactly. If you saw this right here, you could have taken this trade straight down and then write it between the zones, and then the same thing again happens right here. So right here it's consolidating because all the algos are right here, and then every time price comes down, it'll buy, and keeps pushing it up until this bank has enough orders to shoot it upwards. And that's
Okay. I usually don't go on these small time frames ever again. I usually just stay on the 4 hours now. But once I see too many lines too close, I usually just stay away from the trade. But then I would notice that sometimes you might call a trade and I can't really differentiate between the trend lines. Well, sorry, the SR too much. So I might just leave it altogether. Sometimes I will take the trade if you're posted because I will say, well, there is something that you all see that I maybe didn't notice. But I more feel comfortable with the gaps between the zones.
Oh yeah, no, definitely, yeah. You can like what I do sometimes is I'll take it off and then I'll see if I can identify a trade. Like if I see something,
Right.
I see like a sell right here. Then after I'll add the SR to see if it's in a good zone. So right here, if we have the sell, I would probably wait for it to break below this zoned area, uh, like this area right here. I wait for it to break it, and then once it breaks, then you can take the sell to catch it down.
Right.
Similar to right here, like if we had a buy signal right here, I would wait for it to either break this zoned area right here or something before I would want to enter. So like right here, obviously price rejected, but right here this candle broke this zone right here. So once it broke, you can write it up. pretty much.
Okay, because like today, for example, I think I took the I hear you mention the Euro NZD, and I took it as it broke below when the forward candle closed below the last resistance or support. Sorry, it closed below the last support. So I took my entry at around 78,587.
Oh, which one for NJ?
Euro NZD.
Your NZD? Okay, that's fine. Oh, okay, so you entered somewhere around here.
Yeah.
Which time frame were you trading on?
Forwards.
4 hours?
Yeah.
Oh yeah, it's probably what I saw earlier because I marked it up right here. Oh man, I missed this trade. This would have been a nice one.
Yeah. So I took it from about 78.5 as I said, 5.78 around there. So it rode all the way down, but then I noticed you all would usually wait for the signal to fire.
Yeah, I would wait for the signal. It's not, it's not completely necessary, but of course you want to trade in the direction that price is going. So I would have waited for, a sell signal. I think this was a sell signal, but it didn't close. But you can see here, like price, like as it broke a support here, and then you had a sell signal. If you did this right here, it's a nice move down here for, over 100 pips.
Yeah, well, I think I caught about 150 on that move.
Wow. Yeah, that's pretty good.
And I know you all will usually try to keep it, one standard way based on for learning purposes. But I just try to, tweak it every now and then. So I usually kind of comfortable once I see it enter a zone and the candle close, I would wait for the pullback and just enter before the signal usually comes. And it works, most of the time. I don't think I've really had a loss, a big loss or anything like that. So
yeah, no, that's good. If you're managing your risk properly, then you should have no problem at all.
yeah, I think the only problem was gold. That gold really caught me about 2 times this week, twice.
Yeah. A lot of times I try to wait for a pullback now because I know like usually if it's a big candle, especially like a signal candle, it'll pull back a little bit like it did right here, and then
Yeah,
I would just wait for it to pull back and then put a sell stop so it could catch it as it comes back down
right.
instead of entering the market like we've been doing before.
I think before I did the signal on gold, I think the previous 2 days it actually respected the zones. It didn't break any of the zones, and it just went bouncing in between that zone. So it was like 100 pips down, 100 pips back up. That's how it was going on. I said, well, okay. So I saw that you send the signal, and I said, well, all right, it should work perfectly here. And that's probably one time I think I don't know what went on with the US dollar, and it just started drop, and then it shoot straight back up, and it took a profit afterwards, which was good.
Yeah. Usually, if both of our analysis lines up, then it's almost guaranteed to win always.
Yeah. So that was actually pretty accurate. Probably after the NFP and stuff. Well, I know with the whole coronavirus things, there's tend to go out the line a lot. We missed it. So
Yeah, the strategy works pretty well. I think I'm going to keep using this even after coronavirus because it just makes things a lot easier. Like I don't have to be looking on the, waiting for trades like throughout the day. I can just, I know what time to look at the chart and I just look at every 4-hour candle when it closes.
yeah, I find this works way better. Way better. Usually I would usually set like a timer for just for the candle to close, and I would extract back probably in a 4-hour time, and yeah, everything easier that way. I find it works better.
Yeah, exactly. And then since it's on the higher time frame, so you don't have to really worry. You just let it run, and then if it's TP, then that's when you go check it again.
Correct. And you most times I think if not 95% of the times it usually goes straight to total profit. So it's have no worry at all.
Yeah, and it works perfectly, and I'm glad because a lot of other trading companies are not doing so good because due to the conditions. But like, luckily we were able to find this strategy to make it work. So it's been good. It's been good so far.
It really has. It really has.
Definitely. You see
I
the
think
chart.
I think the zones thing it was a little trickier for me in the sense that having to do that manually was a lot of work because I would have used the version 1 of the SR, and to use them rays to draw them zones was a lot of work just for one chart. So it really came in handy.
Exactly. Yeah. Yeah. And TPs have been hitting like back to back. It's crazy. Like I'm shocked how accurate it is. You know, because I haven't really seen anything like the K2 strategy was accurate. That shocked me, but this shocked me more that this is like hitting like how it is.
Yeah. And the indicators and them just were perfect with everything basically. It just goes together good.
Exactly. Yeah. So we always have an edge.
And for the people that know would have joined, they would be much happier because the pip size that you are bringing at a week, it would be way more that, than back then when it had to wait for entries and it might have been smaller and stuff like that. This actually works out better for them as well.
Yeah, exactly. Like before it used to be like, 10, 15 pips. Now we're doing like hundreds of pips and they always hit. So it's like so worth it.
Yep, exactly.
Yeah.
That is good, man. That was mainly my question. I understand these zones and stuff now, so it's more or less I don't have any problems with it at all.
Yeah, that's good. I mean, especially now because you're a lot busier. So you can, you just have to look at the chart a couple times a day.
Yeah. And that is it. Everything else work out for you.
Yeah, definitely.
Thanks, man.
Cool. So we have one more question. So Candace is asking what indicators are using on these charts. So Candace, so we're using 3 different indicators, all of the K2 indicators. I'll take them all. I'll show them to you one by one. So the first indicator we use is the trend meter. We don't use it all the time, but generally we like to use it to see the overall trend. So it's down here on the bottom. And what it does is it shows you the overall trend on 4 different time frames. So right here, under the settings, you can set the first time frame to however long you want it. I generally have it set to the intraday settings because I always trade intraday, and I want my trades to close within 24 hours. So what I do is I set it to the 30-minute, 1 hour, 2 hour, and 4 hour, which pretty much gives you a good general understanding as to what the overall trend is for that day, or for 24 hours moving forward. But if you're scalping, you can change it, to the lower time frames, like the 1 minute, 3 minute, 5 minute, or if you're swing trading, you could change it to the 4 hour, daily, weekly, and monthly. And when you set that up, down here, when it turns red, that means that the overall trend on those 4 time frames is trending downwards. And as you can see here, price is trending down. And when it's green, that shows that the overall trend is trending upwards. So you can see that price is pushing up right here, and the trend meter was green. And when it's blue, that means that price is neutral. The overall trend is neutral on the 4 time frames, which means that on some of the time frames, say the 30-minute, 1 hour could be trending upwards, and on the 1 hour, the 2 hour, and 4 hour could be trending downwards. So when they don't all match up, it'll turn blue. The next indicator that we use is the K2 momentum indicator. This is the original K2 indicator that I developed, and what it does is it signifies where the momentum of price is going. So if price is swinging upwards, it'll give you a buy signal and show you that price is swinging up. As you can see right here, you got a green buy candle, and then price shot up. Let's see how many pips. Price shot up like 200 pips. Again, right here, you had a sell signal. This is signifying that price is going to be swinging downwards. So if you measure this right here, you can see that price dropped well over 200 pips, maybe close to 300 pips, and then so on. And then lastly, the last indicator that we use is the K2SR indicator. The SR is short for support resistance. So what this indicator does is it automatically plots the support resistance on the chart for you. And as price moves, it'll automatically adjust. So I have it set to 100 candles back, but you can adjust the settings to, this is how many candles that the data goes back from. So if you want it to go, 500 candles, you can change it to 500 candles. And then the lines are going to adjust to the strongest support resistance, 500 candles back. So as you can see right here, the support resistance changed. And this is if you're looking for, the overall support resistance very far back. But like I said, I trade intraday, so I like to keep it at 100 candles, which is about 16 days back. And what happens here is as price moves, you can see these lines on the chart are going to be adjusting. So just by looking at that, you can see that it broke through that resistance. And then as it breaks into the open, you can see right here, it creates a new support right here, resistance up here. And it pretty much automatically does that for you so that you don't have to do it. And it makes things a lot easier and allows you to trade more efficiently because then you don't have to go through the chart and draw your own support resistance. It does it all for you. But yeah, that's pretty much the 3 indicators that we use. Support resistance indicator, the momentum indicator, and the trend indicator. And if you tie these all together, this gives you an extremely good edge in the market, because the thing is, if you know the direction of momentum and you know where the trend's going, so right here, we know that the trend's going down, correct? Because it's red. And then we have a momentum indicator showing us that price is going downwards. If you match these like 2 and 2 together, red and red, like our original strategy, you could enter a sell order when you get that signal, and then you can ride this thing down. And if you took this trade right here, you could have locked in 454 pips. Easy as that. And then you could just keep doing it over and over again. So right here, 450 pips. Again, right here, we have a sell signal. We know the trend is a downtrend. What do you do with that? You enter a sell. Enter a sell right there, another 450 pips. Same thing, back and back and back. So right here, we have another sell signal. The overall trend is red, telling you that the price is trending downwards. What do? Enter another sell. There you go. You locked in well over 1,500 pips with only 3 trades. And it's as easy as that. Again, right here, we have another sell signal. Could have locked in another couple hundred pips. It goes both directions. Right here, we have a buy signal. We have a buy signal telling you that momentum is swinging upwards. Down here, the trend meter is telling you that price is in overall uptrend on 4 different time frames. So if it's trending up on 4 different time frames, odds are price is going to go up. Plus, you have the momentum indicator telling you that momentum is swinging upwards. So what are you going to do when you see 2 buys or you see 2 green candles? I mean, a green candle and you match it up with the trend meter, you enter a buy. And then when you enter a buy right there, locked in 629 pips. It simplifies trading for you, so you don't have to make, like, the thing is, a lot of people make trading complicated, but it's really not that complicated. All you need to do is determine which way the price is trending. If you have this indicator down here, you can see that price is trending upwards without even drawing any trend lines. You just see if it's green down there, and then you know it's trending. Next up, you have an indicator that shows you when price is going to swing in momentum. So right here, we have a red candle. So this is like a retracement back because it's going against the overall trend. But once you get a buy signal right here, this gives you the green light to enter a buy because momentum swinging upwards in the direction of trend. So once you know where price is trending, plus you know where momentum is going, obviously price is going to go up, right? So then you'll enter a buy, ride that up there, have another entry right here. What's that, like another 600 pips, another 600 pips right here, straight winners. Like we haven't even came across a loss right here. So right here, you have another buy right there, another one right here. There's no stop losses hit. So if we zoom in right here, no stop losses, straight winners. So you could enter multiple trades right here. You could have this trade, you could have this trade running, 3 trades running at a time until they hit profit target, which happens over here. Enter another one right here. Let's do another one right here. No stop losses, all profit. So if we do the math on this, you got, so man, let me just do the math for you because this is like shocking me right here. So let's see, we got 600. So I'm just going to multiply this because this is going to be too much math. 600, 1, 2, 3, 4, 5. So we got 5 times 600. You would have made 3,000 pips right there. If you're trading this at a standard lot's it's $10 per pip. So multiply that by 10. You would have made $30,000 with just 5 trades. How long did this take? How long should it take for you to make $30,000? You would have made $30,000 in 13 days. Easy as that. You want to take the other trades this way? All right, so we got 1, 2, 3, 4. Oh no, that's not 4. So 1, 2, 3, 4 right here. So what is this? About 500 pips. So 1, 2, 3, 4. So 4 times 500, that's 2,000 pips times the standard lot. You're trading $10 per pip. $20,000. You would have made $50,000 just trading one pair, Euro NZD. So let's see, from right here, if you took all these trades from over here to today, so in 56 days, you would have made $50,000. It's that easy. And this is why I quit my job. You know, I had a 6-figure job. I was an attorney before this, but why would I stress myself out and work a stressful job when I can just trade all day? Easy as that. But yeah, guys. So we went well over the 7 o'clock limit. We've been on this call for 2.5 hours. So if you guys have any other questions, feel free to send me a message on Telegram or any social media, email, whatever, and I can get back to you. If you guys are interested in the strategy, you guys can go on our website. Or I'll just go on our website real quick. So if you go to our website, kttrades.com, right now we have a trial going on. So normally it's $150 a month, but if you sign on today, you'll have the first month for $50. Whole month to try everything. You get all access. If you like it, then you'll just be billed at the normal rate at $150 a month. If you don't like it, then you guys can cancel anytime. There's no long-term commitment. And I mean, you guys saw what was possible. $50 could literally change your life. If you took these trades right here, within 15 days, that's not even a month. If you just traded the strategy within 15 days, you could have made 30,000. Would you trade $50 for 30,000? I would. I don't know about you guys, but that seems like a good. It seems like a good exchange. But yeah, guys. Let's see. Candace said, when does the promotion end? So me and Aaron are actually thinking about raising the price because a lot of people said that $150 a month is way too cheap. Which I mean, honestly, it does make sense because like I showed you on that last pair, it's just trading one pair for 15 days can make up to 30,000 if you took every single trade. So I'm not sure when the promotion will end. We were supposed to end it in March, but due to coronavirus, we wanted people to have the opportunity to at least test it out. So we extended the promotion. I can't say the promotion is going to last much longer since businesses are reopening this Friday in LA where we're located. So once coronavirus is over, or not over, but once things get back to normal, we're gonna raise the monthly price and we're gonna remove the trial. But whoever signed with K2, if you subscribed right now and you locked in this price, then you're just gonna keep paying that price. But new people that sign up to K2, once price is increased, then they're gonna have to pay that new price. But all of our previous members, you get grandfathered in and you get to lock in that old price that you signed up for. So the promotion is probably not going to end. I mean, it's probably not going to last another month because we were supposed to end this 2 months ago. So if you do want to try it out and you have $50 to spare, I mean, feel free to try it out. You pretty much have everything. You have access to the K2 indicators, the K2 courses. Let me see if I can pull up the actual course, because then you guys can see what the course looks like and what you guys are getting. So I'll just run through this real quick. Right. Right, here we go. So when you guys sign up to K2 for the strategy, this is what the course looks like. So once you log in, it'll look like this. And then pretty much we have modules for everything. It'll tell you how to get access to the indicators, links to our Telegram groups. Right here, we have a new trader section, basically explains the basics of Forex. Right here, I have a video explaining the functions of TradingView, how to trade like me. Basics for your trend lines, for resistance. And then this is where you get to the good part. This is where it tells you how to add all of the indicators to your chart. And then right here, we have the intraday strategy that we trade on the 30-minute. We have the pullback strategy, what I went over earlier, scalping strategy for you guys that like to trade indices, The indicators are explained right here, the K2SR indicator, the zone trading strategy that I was explaining earlier, the trend meter, how to set up your stop loss like we went over earlier, exit strategies, and all of our previous webinars. So you guys have access to pretty much everything. And this covers, I mean, pretty much anything you guys would really need. But on top of that, you have access to me. So basically, I'm your mentor in all this. So if you guys have any questions and you guys, you know, have trouble applying the strategy, which I don't think you will because it's super simple, you guys are pretty much good to go. But yeah, guys, looks like I think that's all the questions. So if you guys have any other questions, I mean, feel free to hit me up. I'm always available. If you guys are subscribers, you guys know that you guys have one-on-one access to me, and I can get on one-on-one calls with you guys if you guys want to learn to trade exactly how I am, because, you know, obviously it works. But yeah, guys, all right, this was a good live trading room, good live trading session. So I'll catch you guys next week. Have a good night.